Hello everyone, Jason here. In today's video, I want to talk to you about one of my favorite trade setups that I call the sweet spot. Now, this particular trade setup will show up a few times a day in whatever instrument you like to trade. If you like to trade the CL, which I do, or the ES, which I also like to trade, it will show up in the NQ and currencies, and this is a very cool setup, and I want to show you on Friday, August 9th, exactly how this opportunity presented itself. Now, the very first time it presented itself was in the overnight session, right around 7:30 p.m. Central Time. Market rallies up into this sweet spot area, and then subsequently makes a new high. So there was a 2.5 point difference between where the entry would have been and the high of the day. So if you had a 2-point stop, you might have had a stop out here. So let's assume for a minute that you did take a stop out taking this opportunity. So we're going to look at these as a one lot basis, and let's assume for a minute that you had a 2-point stop or 8 ticks. 8 ticks times 12.5 per lot is, there would have been a minus $100 stop. Okay, so right here, there would have been a minus $100 stop. In fact, let's make that, let's put the dollar sign in front of it so we're very clear about that. So a $100 stop. However, the way I like to trade this opportunity is if it passes through and comes back down and gives you a second chance, I would take it. And this time, the opportunity gave you as much as 16 points. So I'm just going to say 16 points times 4 times 12.5. There was an $800 opportunity on a per lot basis. So we'll go here and we'll say down here that this was an $800 opportunity. Okay, $800 opportunity here on the second time through it. Now, as the market comes into the RTH session open, market rallies through this level again and pulls back. Now, the fact that we talked about this in the trade room, the fact that it had passed through once already gave us an opportunity here. We said we wanted to wait, see if we made a new high. And this is a trade that we actually took in the trade room. Our stop ended up being 10 ticks, 1 tick above the high. And this is a video that I'm going to show you. This opportunity then gave you this move all the way down for the chance for 34. Let's make sure we measure this out the right way here. We'll come back here and we'll take this. Yeah, that's it. So the entry gave you an opportunity for 34.5 points. So again, 34.5 points times 4 ticks a point times 12.5 per lot. This gave you an opportunity here for $1,725 opportunity here per lot. Okay, so that gave you an opportunity on this move down. Now, what was fascinating about this particular day, and by the way, I did not get all of that in the trade that I'm going to show you. In fact, the market was pretty aggressive to the downside, and what my thought process was, despite the fact that it came down to this sweet spot, it missed this area actually by a single tick, which is close enough when you're talking about a 34.5 point ES move. That would have been close enough, and we could have taken it down there around the target. But what my anticipation is that this trade, while it doesn't always give you 34.5 point moves, once you do get in, it gives you an opportunity to get safe. And the way that the market was moving, I thought the opportunity would be in, get a quick little bounce, give you, if you were going long, give you an opportunity to get safe, and then continue the push to the downside. That's not actually what happened. So this opportunity, again, comes down to within a tick of the sweet spot setup. That's within the tolerances of that setup, and then rallies the balance of the day for a potential opportunity of 33, almost 34 points. So 33.75 times 4 times 12.5 is another opportunity for 1687, right? For 1,000. And again, this is on a per lot basis. So that would be a $1,687.50 opportunity per lot, right? And so again, on this trading day, you would have had a $100 stop, an $800 opportunity, a $1,700 opportunity, and a $1,687 opportunity. Now, for me, what you're going to see here is I get into this trade up here, and I'm about to show you this. I get into this trade up here at 33.5, and I end up with an 8.5 to 1 reward to risk ratio trade on the ES. So again, not just showing you what could have happened and a what if scenario, but what we actually did and executed in front of a live trading audience on Friday, August 9th. Now, I'm going to be conducting a webinar next week where I'm going to be showing you a bit more detail and how these opportunities work in other markets. But for the sake of this discussion here today, there was ample opportunity for you to be able to do a lot with very little risk, right? So even if you said, I'm going to take this down here, and you said, well, I missed this chance, and it pulled back here, there was still a lot of meat on the bone. And if you look where this thing stopped on this particular day, right, when it rallied up, if you look where it stopped, if you measure back from here to here, which is where the where that sweet spot setup was, it got to within 3 ticks. So technically, you could have had another opportunity here, potentially, right into the close for another 16 points on a move out of that zone. So I'm going to show you this trade that we took here on Friday, August 9th. It's an 8.5 to 1 reward to risk ratio. The trade itself was about 3.5 hours, 3 hours and 15 minutes, I think, to be precise. And so what I've done is I've taken this trade, I've shown you where we get in, put a little music behind it, I chopped it into pieces, condensed it, sped it up, and then show you exactly where it is that we exit on that particular trade so you could kind of get a sense for exactly what we did. So without further ado, here is that sweet spot setup trade from August 9th. In at 33.5. Stop is 36. Stop is 36. Target is the mid at 28.